What's going on, everyone? Welcome back to the channel. So today we're going to do a stock pick of the week. I haven't done one in a while, but last one I did was PLTR, but that was for a swing trade. Today I'm just going to do a quick breakdown of FUBO, and I'm going to look at why I think it's a good stock for the next few months and why it could be a good long-term hold overall. So let's dig into the company and look at some financials and look at what this company does. So if you like what I'm going to do in this video, feel free to like and subscribe. Let me know what you guys think in the comments below, and let's get into FUBO, or as I like to call it, FUBO. Alright, so FUBO is a sports and entertainment provider. So they have 8 live channels, 0 filler. So basically no ads, no commercials. You can watch top teams and leagues, plus news, movies, and shows, stream live or record to the included cloud DVR. So these are all the channels that you can watch through them. So BN Sports, BN Sports, and BN Sports Canada. So these are all European. Well, these two are European, UK, and in Europe. And we got Spain, and you have Paramount, so obviously movies. You have FUBO Sports Network, which is their own network, which is mainly football, meaning soccer, not American football. So and Game Plus, I'm not sure what that is, but I assume it's either game shows or sports. And then the Fight Network, which is of course UFC and that kind of thing. So what they have is the FUBO app, which you can download for free from all of these devices and your PC or any, obviously any place where you want to stream sports or movies from. You can record those shows then to your DVR, and it's a pretty good service. We look down here, it's $15.99 a month, no hidden fees, cancel any time. So $15.99 a month is not bad for unlimited sports, especially if you're a big fan of soccer. I'm more of American football, and they do have some American football in here, but I prefer DAZN because I'm in Canada, so it's better for me for football and soccer as well. But FUBO, especially if you're in the States or in Europe, then this is definitely the better company to go with. So taking a look at their recent quarterly press releases, they talk about how FUBO exceeds $100 million in revenue in Q4 2020, so it's capping the strongest year to date. So it goes into this by talking about how the company closed its strongest fourth quarter and year in history, topping $100 million in quarterly revenue for the first time. So they closed $105.1 million in Q4 2020. With 547,880 paid subscribers, including 92,800 net subscriber additions in the fourth quarter. So they gained over almost 100,000 subscribers in the last quarter alone, and they're up to almost 550,000 subscribers. So 550 times 15 is what, right? And that's what they're making every month just from the paid subscriptions alone. Complete fourth quarter and full year 2020 results are detailed on FUBO's shareholder letter, available on the company's IR site. And they don't actually have a investor presentation, which I usually like to get into because it kind of tells you what the goals of the company are and how they're looking to expand on their enterprise. But with FUBO, you see it's more very straightforward what their plans are, what they do, how they plan to make money. It's all right there in front of you. Shareholders pay a certain amount a month to get their subscriptions. Obviously they don't have ads, so they're not getting ad revenue. It's simply just a paid subscription service, which they can then up the price or add things to, or add a premium subscription or something to then generate more revenue. And obviously through partnerships they can generate revenue with different partnerships to put them on their channel. So to pay obviously like Paramount or BN Sports or however it is, they probably have some sort of agreement to stream through FUBO. So it talks about here the CEO David Gandler talks about how they closed their strongest record. They remain focused on continued innovation and are excited about our growth opportunities for 2021, including the ongoing expansion of our advertising business and the development of our own sports book. So what that means is like they are advertising through their app, but not necessarily through their shows. So when you're watching it, there will be no advertisements, but they are still making revenues somehow, or maybe through online, like their website or whatever, right? I'm not sure exactly what they mean by their advertising business, but they are developing their own sports book. Basically, they have their own partnership with a sports book company in which they can then take bets on the sports which you're watching. So that gives them another kind of added feature, right? As they say here, our goal for 2020 and beyond is to develop FuboTV into a new kind of media company that combines both innovative streaming video and sports wagering. So they intend to deliver leading sports news and entertainment content to a growing subscriber base that transcends the industry's current virtual MVPD model, and are excited about our ability to capitalize on the future market opportunity. So that's kind of the breakdown of what the Q4 had in store and what they kind of reported in Q4. This is kind of their investor relations page, and it kind of gives you a good breakdown of the stock and information about the company. Here, obviously, you'd find their investor presentations, but there actually are none available at this time. So the only thing we have to go on are the press releases and, like the one I just showed you, and their different news articles and kind of things they have highlighted here on their website. So as I said here, they're named to Forbes' next billion-dollar startup list in 2019, and FuboTV is the live TV streaming platform with more top Nielsen-ranked sports news and entertainment channels for cord cutters than any other live platform. So it's basically the number one sports streaming service since 2019. Like I said, they have over 550,000 paid subscribers. They have 545 million total hours streamed in 2020. So obviously that's substantial amount of times watched. Basically 10 times every single person is watching 10 hours, I guess, or something like that. Anyway, they're watching lots of sports, and they have 206 monthly hours streamed per user in December 2020. So the average streamer is 206 hours a month, 269 million in 2020 revenue. So obviously 100 million of that came in Q4 alone. So they made 169 million in the first 3 quarters and then 100 million in Q4. So you can see why there's rapid growth and why there is opportunity for expansion and for this to kind of run. I'm talking about the stock price, especially with these kind of headwinds of good Q4 earnings results and kind of growing subscription base. It's going to give you a good kind of, what I should say, like it's going to give you a really good base or a good kind of idea of where this company is going, and the fact that it isn't just some garbage company with no earnings or no plans on how they're making revenue, or a tech company that's just trading at 10 times multiples of what it should be trading at. This company is actually very value. Well, it's at a very good value currently, and that's kind of what I want to get into now, is just talk about the stock price and look at kind of overall where it's gone, where it is now, and where it could be heading in the future. So let's jump into that now. I wish there was more to get into here on their investor relations page, but there really isn't much, and they really don't have much on their website. I didn't look at this stock information here, but it's basically just an overall chart. So there's nothing too big there. I'll go over to this chart here because it's kind of a better look at. This is the daily chart. So it's showing you since November of 2020, basically when it started to have this big pop here. I'm not sure when they IPO, so it's okay. So it's been out for quite a while, but you see, in the past year, when you look at the daily chart, or 6 months, when you look at the daily chart, you're going to see that ever since it started having this big run up, so it was at below 10 and then it broke 10 and it started to run up and then it kind of just skyrocketed, right? And you'll notice that around this area here is when they put out their press release about their Q4 earnings. So that's when you had this big move up to $50, right? So originally this stock started moving back here kind of in sympathy with the rest of the markets, up to 61, dropped to 24, back up to 50, right? And this is after the press release, and then you just had a steady fade. And if we were to look at kind of the overall chart, we would see that there are levels, there are kind of moving average levels here, which it keeps breaking down and rejecting. Sorry, I don't have my other charts here. This is just investing.com. So their chart doesn't have the overall moving averages on it. Yeah, it's not going to be a big deal. Just know that like each one of these levels, there's basically a moving average, which it comes down into, goes up, and then breaks down below. So that's kind of why you've had this kind of movement action down here. It breaks down below the moving average, breaks up, and then breaks down, breaks back up, and then breaks down again. So the moving averages and these kind of previous prices of support are turning into prices of resistance. And that's kind of the same thing that happened here, happened again here. It's just been kind of a prolonged, because the entire market has been kind of going down and selling off, which is why you've had kind of a wide sell-off from all of these stocks that were shooting up back in January and February, and even early March of 2021, right? So what you want to see in FUBO here is it hold this $20 level. So this $20 level is acting as your support level and kind of your overall level from even from back here. Like I said, when it shot up here, obviously $15 is another good level of support, but ever since it shot up here and broke this level, $20 has acted as support every time, and 24 obviously broke, so that is not necessarily a great sign for the immediate short-term future. But overall, when you look at this chart and you look at everything I talked about previously, about the growing quarterly financials, about the increasing subscription numbers, about the increasing advertising and sports wagering businesses that they're putting themselves in position to benefit from their entertainment and other forms of subsidiary income. And that's kind of the big thing here, is that we need to look towards the future and not just towards tomorrow or next week. So if you're looking to buy this thing for the short term, then I would wait and see what happens around this $20 level. If it breaks 20 and goes to 15, I think 15 is going to be that bottom, absolute bottom. But I think $20 is going to be your immediate short-term bottom. And if it holds above 20 and breaks back above this 24 level here, this 24.15 level right here, and can consolidate above it, or at least hold above this $24, $25 level, then this thing is going to be bullish for another move back up to 40. And so I'm going to be looking to buy this thing on any dips towards 20, and anything down towards 15 I think is a steal. But in between this $20 to $15 range, and even anything below, between 20 and 22, I think is fair price, because I think this thing is going to go up to 40, 50, $60 in the next 2-3 years, right? I don't know if that's going to do it in the next 6 months. I think it could, and it very, well, compared to how the market performs in the next 6 months, it might relatively do better than the market. But if the market, this thing trades very relative to the market. So if the market is selling off, then FUBO will probably end up selling off as well. And that's something you need to be aware of, right? If the whole market is kind of tanking, then you don't necessarily want to be holding these names that are trading very similar to the NASDAQ or the New York Stock Exchange, depending on, obviously this is a NASDAQ listed stock. So actually, maybe it's not. No, actually it's a NYSE listed stock. So the S&P, like when you see the S&P or in the NASDAQ kind of dip and kind of sell off, then you want to be wary of what's going to happen with the NYSE and whether FUBO is going to follow, which it more than likely will. So bearing kind of overall market sympathy, and that it's not going to be a bearish market for the next 6 months, and we're not going to have a huge sell-off, because I think that over the next few months we're going to have probably maybe a bearish move or a consolidation, and then maybe a bullish breakout, but then eventually a sell-off. So you kind of have to plan whether you want to go long now for the short term, but I would take quick trades. I wouldn't look to hold FUBO for the long term, unless you're playing for the next 3 years. You see what I'm saying? So like if you're looking to hold it for a year and you want to get in now, it's probably a good play, but I'm not going to guarantee you success. But if you wait and buy, if this thing breaks, goes down to 15, then it's a much, you have a much better cost average and base of support, whereas $20, it could hold, but it could not. But the idea here is, like I said, if it breaks above 24, you want to be getting in or buying with the anticipation of that break, and then that kind of move back up to 27, and then, like I said, 40, really. Because we've had like these big moves where once it breaks $30, it goes right to 40, right? So FUBO is one of those stocks where it gets momentum and it gets in a trend, and it likes to continue that trend. So that's why I say you got to be wary of whether it wants to break down below 20 or whether it wants to hold and break up to 24. And those are going to be big key levels, right? So if it breaks down below 20, you want to be buying towards 15, defending the $15 level, even defending the $20 level if you're fully confident that FUBO is going to be the play, or if you're willing to hold it for the next 5 years. Then you want to be defending the $20 level and seeing what happens, and then obviously adding once it breaks into the 24 so you can catch the rip towards 25, 26. And obviously then it's just taking where do you take your profits, right? So I think overall FUBO is going to be a great stock to hold for the long term. Any range below $25 is a great buy if you're looking to hold for the next 4 or 5 years, or even 3 years. But if you're looking short term, like I said, wait for the dip, see if it's going to hold support at 20. If it doesn't and it looks to break out over 24, you buy the breakout with anticipation that it's going to run to 26, 27, and then to 30. Okay, that's going to be it for FUBO. I hope you guys enjoyed this video. Please let me know what you guys think. If you guys have any questions about FUBO, or if you guys have any comments about the company, feel free to leave them in the comments below. Like, subscribe, let me know what you guys think, and hopefully you guys will be back with me for another video, back with me for some more stocks and some more recaps. Thanks, guys. Have a great day, and like I said, don't be a stranger.